mind is getting smoother every time. Let's see if I can make it through this entire episode with zero mistakes. Fat chance? How you doing, friends? This is 0 Days to Expiration, and this is a daily show. We put it on at 3 o'clock every day, going right into the close of the market. The first half of the show is going to be market commentary and then also talking about the trades that we put on in our service. And then the second half is going to be some sort of informational thing packed with very dense and really valuable information. Right now, we're in the middle of doing a live 0 DTE out of the money butterfly trade. That's our core trade that we use in our service, and all of our other trades are built around this, or all of our other strategies. This is kind of like the pinnacle, the most finest grained piece of our strategy. It's very full. And so we go over that on the second half. All right, let's get started. Today was an interesting day. Of course, we're following Fed minutes from a couple days ago, and it was decidedly hawkish. Now, there was some interesting balance to that, and that is that Fed Governor Bullard, who is traditionally known as extremely hawkish, has now flipped. And so that throws a monkey wrench in this very hawkish narrative. He's now thinking that, hey, we should pivot and ease off. We can't send this economy into the dumpsters just to placate some of our narcissistic goals. Did I say that? So anyways, today was an interesting day from an economic point of view. In the morning, of course, today was the unemployment news or unemployment report that came out. And there was also other things too that I want to mention. Now this morning, the pre-market open in the futures market was bracing for whatever that news would give us. And so we were right at the very bottom of a range. In fact, I think I can show you that. Right at the very bottom of a range. No, I'm not going to show you just yet because we want the drama to build. So the market opens, we're right at the bottom of a range, and then the report comes out, and whoa, I guess it wasn't as bad as we thought. And then the market shot up. Of course, there was a lot of volatility there. We went from one top of the range to the bottom of it again, then to the top, and now we are off to the races. And we're really just taking off right now. In fact, I have a trade on that I'd like to share with you, and I think that we're going to get a chance to take that trade off. As a matter of fact, I think we're getting to a point where we can take it off very soon. There's only an hour left in the market. However, I think we've achieved almost the maximum profit that we can get in this trade. So let's take a look at that, and that is on camera 4. All right, so here we have a butterfly. You can see it's a broken wing fly. Typically, I'll put on a symmetrical fly, but in this particular case, when I put this trade on, it was so far out of the money that the long leg, I didn't have to make it symmetrical. And I thought, okay, it didn't change my risk to reward. I still had a 1-to-9 risk to reward. So I put that trade on, and it worked out just fine and dandy. So you can see also it had the added benefit of, in case the market just really took off, even if it went past this fly, it would still be in profit. But as you can see right now, the market is almost right in the middle, right there. Almost a perfect pin trade. And the market could take off and just keep on going. I'm not really worried about that. I just have a tiny little bit of risk here to the downside. So overall, we're looking pretty good. All right, let's see here. I'm going to zoom in on this so I can see it too. And if we were to unlock that, let's get rid of that slice, delete the slice. We'll delete this slice, and so we can focus here. So the total potential profit of this trade is somewhere around, let's see, it's 3 wide, and it cost about 25 cents, so it's about $275. So that means that the risk was about, let's see, now the risk was 36, so it's actually $64, $264 of potential profit. Right now there's about $40 left in it. You can see this with the theta. I could close it right now. Now, the way I close this trade, because I'm working with a super small account here, so I want to close it without getting a pattern day trader hack, or pattern day trader strike, I should say. I close it with what we call the pattern day trader hack. And the way we do that, this is interesting. I put on the exact opposite trade. So this is a call fly. You can see it right down here. A 388, 391, 393 call. And the way I take the trade off is by putting on the opposite trade, which will lock in the profits. And you do that by just putting on the exact opposite. That's what in the red here. And by putting that trade on, it will flatten it out. I can demonstrate that by just turning on this in the analyzer, and you can see that it just flattens it out, and then it just gives me the profit. Don't pay attention to this, but if you look at the cyan line and over to the left, you'll see that it's sitting at about $150 something. So that gives you the total profit that I could lock into this trade. So that's pretty cool. And that represents, right here, it's actually $171 that I could lock in. So here we are sitting with that trade. That's fine. We may be closing that very soon. So we'll keep an eye on that. So back to the big head and back to the market. So the market is an interesting phenomenon that we call the world. And I'm sure that there are plenty of other people out there that have another name for it. But essentially it means that whatever is good for the market is generally, whatever is good for the economy is generally bad for the market. Whatever is bad for the economy is good for the market. And this is all because of just like I said, the narcissistic situation that the Fed sets up and the expectations that we have of them, and because they're, quote, data-driven. So we don't want them to raise interest rates. We want them to turn around. When I say we, I'm using the figurative we, the global we, as in the market. Want them to pivot and start a more accommodative monetary policy, even though that's what they still have. Technically, a lot of people are feeling and recognizing the hurt that's going to come down the line if they continue raising interest rates, which may be something they have to do. Now, their narrative is saying, hey, we're sticking to that course. We're going to raise interest rates, and we're data-driven. And so as long as the economy is still hot, and this is questionable whether the economy is hot, but that's what they're pretending. As long as the economy is still hot, we're going to pound that inflation back into its deep, dark hole. And so when we see good news, that means, the economy's getting hotter. Or great economic news on the employment front, too many people have jobs. We need to bash those people back into their holes so that they no longer can spend money, and that will, quote, bring inflation down. So that's the situation that we currently have. I know, it's insidious. I'm going to change the color here. And I noticed that I look a little pale. So what we're going to do is we're going to go to these marvelous lights that I have. And we'll go to the key light. And we're going to change its color down to yeah, that's much better. And then we'll change the fill light. And we'll bring it down. Oh yeah, that's good. And now we'll bring the intensity down a little bit. There we go. Not so pale now, Ernie. All right, you tell me if that looks good. Thank you very much. On screen, on live editing of the production studio. So back to opposite world. This morning we had fairly good economic news in terms of the employment report. Apparently the unemployment rate went down to about 3.5%. Of course, nobody really believes that because the household numbers show a very different story. But that should have caused the market to go down, but it didn't. Apparently the market likes that now. Maybe that's because of Bullitt's words that now are tempering Jerome Powell's words. You don't know where everything stands. It used to be the Fed would say it's this way or that way, and you knew what to expect for the next few months until the next FOMC meeting. But now everything is in shambles. Plus, now this may be one of the reasons why it kept on going up, and that is at a little later in the day or in the morning, another report came out called the PMI. I think it was PMI Services. Let me just check there. Yeah, the ISM PMI Services, and it showed a huge action in overall services, the services industry, from 55 all the way to 49.6. That is mammoth. That is horrible. Plus factory orders are down twice as much as what they had expected. So 100% more reduction in factory orders than what was expected. And then there are, so unemployment went down to 3.5%, but manufacturing the other day, it's down too. It was connecting huge. Now services are connecting, all pointing to a very, very weak economy. And also the average hourly earnings went down. The only thing that really was good in this report was the non-farm employment change, added 223,000 jobs. We're expecting 200,000. And the unemployment rate went from 3.7% to 3.5%. Everything else totally blows. So maybe on balance with all of that news, it was a net negative for the economy, therefore a net positive. For the, was I on mute? I bet you I was on mute. That's funny. And nobody told me. You guys out there I got 16 minutes into this podcast and I wasn't on mute? Ah, okay, I'm good. I bet you that I had the wrong microphones though. Let's check the microphones. Let us check, because I think I was on the wrong microphones. Huh, I had the studio display microphones on. All right, now let me ask you, does that sound better? Is that better sound? Check. 1, 2, 3, 4. Testing. Is that better sound? It's like a whole new world opening up, right? It's thank God for the studio display microphone. I got these mammoth microphones up here, and I was using the microphone that's built into my studio display. Sounds closer. Oh, so you have to turn your volume down. Okay, the studio displays, because I was saying, man, I had zero mistakes, and I looked down and I had these Sennheiser boom mics up here off. I go, oh God, I just talked for 16 minutes. And there I thought I was doing so well. They were off, but no harm. All right, where was I? Man, I get distracted there. Let's go back to, let's go check the trade, see where we're at. Trade's still looking good. We're right now sitting at about $200 profit, right? Right there in the middle. We have a potential of another $64. But do we really need it? Should we just get out? I'm going to take a vote. Should I just get out? Yes or no? Or should I sit there and try to pin it to get a few more dollars? What do you think? I'm waiting for your answers. I'll do whatever you tell me to do. What does my mind map tell me? Okay, so that's a good point there, Robro. Of course, Iz says take the money and run. Charlie thinks it will pull back, exit as soon as possible. When did I place the trade? What time? Could you show us your order fill? Yeah, I'll show you the order fill. It was at 9:34 this morning. So I've been in it almost all day. Jonas says get out. Everyone's saying get out. All right, let's get out. There we go. I locked in the profit. Wait! Yeah, Charles is asking if I ever tried a 2-3-1 correct size for this spread, and what that is called an unbalanced fly. And there are good and bad about the unbalanced fly. The good part is that you can get into a similar trade with less debit. And the bad is that you're carrying basically an extra vertical or an extra credit spread. And so you're increasing the overall cost of your trade. Yeah, I've tried the unbalanced fly, and they're a very good option for some things. But for this particular case, it really didn't aid in the trade at all. All right. I probably could have gone in for a slightly better price or gotten closer, but that wouldn't have really helped me. But overall, it was a good trade. All right. We have a member complaining that I didn't put this fill in the room this morning. I think I did. Put something in there somewhere around the line. I'm going to go back and check just to make sure. Oh, yeah. I said, this is the trade that I'm putting, but I'm not recommending this. That's what I said. Yeah, I was showing, I had staged 2 different trades. So just so you know that this service is not an alert service. I understand that people that are new in the service are looking for me to trade and to follow me as if it is an alert service, but it is not an alert service. What I'll do is I will post ideas, my own trades, what I'm going to put on, and then you can take that and fool around with it, ask questions, and then I'll guide you through it. In fact, I have an alerts channel that I haven't contributed to for, it's been a month or so, and I'm going to get rid of that completely. That's where I used to put all my alerts and everything. And then I do have a fills channel where I'll put the fills just so people see what I'm doing. But anyways, I display everything every day in many different ways throughout the day anyway, so all that stuff is moot. This, like I said, this is not an alert service. It is a mentoring service, and it is meant for you to follow along. And if you need any help, I'm there to help coach you. So there you go. It solves that, right? There's always going to be some complaint that I'm not doing things as well as I could, and I'm trying to improve. All right, getting back to the economy. We have to get back to the big head first. That trade is over, so that's good. All right, so another one in the bag. And the economy. We're all wondering what's going to happen with the Fed on February 1st, whether or not they're going to be raising interest rates again. The last time they dropped it down to 50 basis points. Right now, the Fed Watch tool, hey, we can take a look at that. And then we'll get to the roll call, and then we'll get to the course. So let's do that. So that's the course, but let's get to the Fed Watch tool. Is that it right there? No, that's not it. This must be it right here. So the Fed current rate is 4.25 to 4.5%. there's a 74% chance, or at least the futures market, the bond market is pricing in a 74% chance that it's going to be raised only 25 basis points, and a 25 or 26% chance that it will be raised 50 basis points. So that's the current, and it's pretty small. And there are some people that might even argue that the Fed may choose to skip a rate hiking event. I don't know that they'll do it this time around because, let's face it, Jerome Powell just made too big of a stink and he's got to follow through. Otherwise, he's going to lose all credibility. Not that he has any, because he's been completely wrong the entire time. But I won't complain about that. All right, we need to figure out what the Fed's going to do. The market this morning, the way it reacted to all of this was, like I said, it first came down in the morning right here before the economic reports came out, and it looked like it was going to test the bottom of this channel here, or this range that we have going. And then when the report came out, it just jumped straight up. And then when the market was about to open, just before it opened, the market dropped. The market opened, and then it jumped up again, and we've been up and away ever since. And it looks like my getting out was timely because I got out right up near the top and maximized my profit. We got that going. Of course, last night, we also have the Tesla story. Look at this. Tesla took a huge dump overnight. So this is the overnight action. And then what this represents, at 4 o'clock when the market opened up, it dropped from where it was about 110 all the way down and went as low as 101. And the reason for that drop is there was news coming out of Shanghai that Tesla has cut prices out of the Shanghai factory from 5% to 12% on their cars, on all the different models. Now, of course, all the bears out there thought that meant that Tesla was dropping prices in order to spur demand. But this was actually a planned price cut. And really, I don't understand how they're coming up with this spur demand thing, because Tesla's got orders for the next few years that they can't make enough cars to fill the orders. So the demand story is just totally off. Anyways, the market totally shrugged that off and just went straight up after it opened up, as you can see here. Totally took away that. In fact, it is ending up much higher. Tesla is a big story in our economy. Of course, the other big stories are like Amazon, who announced yesterday that they're going to lay off, or was it yesterday or the day before, they're going to lay off 8,000 people. So what happens? It goes up. You can't make this stuff up. How about Apple? Apple has been really under the gun, and they announced layoffs too. That's why they're up. It could be just because of the market too. And of course, gold. How's gold doing? Gold is way up. I've been calling that one left, right, and center since November, as you can see down here, telling my client, my people, that this is where you need to be. Any gold miner, gold realty, or gold royalty, or gold streamers, and the physical, just keep on buying. Buy, because that's gonna take off. I think we're gonna see new highs in gold. And silver, it's right behind. Although it doesn't seem to be quite as strong as gold. Although a lot of people think that there's more potential in silver. And the bond market, it's been under pressure big time, but it had a nice little bounce here today, which is unusual, with the market and the bond market up at the same time. And of course, oil has been dropping, which is helping our inflation story, but that's also a manipulated commodity with the strategic reserve being tapped. Bitcoin is acting like a risk-based asset again and just following the market. A lot of people think that should be uncorrelated, or it is uncorrelated. There's no such thing. It is just another risk-based asset, and an extremely volatile one. And the dollar is down today. We're going to see continued drop in the dollar as time goes on. All right, there you go. There's our wrap in the market. Why don't we do Robo saying, attention traders, non-voting FOMC member Bostic is going to speak in 5 minutes. So if he's non-voting, then we don't care. All right. So let's do a roll call. Let's see who's online here. Get back to the big head, and then we'll get to the course. Hey, if you like the content so far, give this video a thumbs up. And if you're not subscribed already and you want to be notified anytime there's new content out, click that subscribe button. That would be right about here, right there. See, it's a little 0 DTE thing right there. How you doing, Iz? And Giannis is here. Nice to see you. Oh, see, Iz recognized the difference in the broadcasting difference of the mic. It's because it was just the mic off of the monitor. It just sounds different. But once you heard the new mic, I'm sure you said, whoa, what a difference. All of a sudden, Ernie has a golden voice. And Haley's here. When did you place this trade? I don't think this trade was not posted in the Discord. Yeah, we covered that. I need to develop some kind of policy when new people come in and tell them what to expect. I do that, but not everybody comes across it. All right. Charles is here. Charles Olinger. And we have Travis. They're all trying to help me out here. And Robro is here. Let's see. Who else do we have? That's about it. Man, there's lots of comments, but Jonah's here. All right. And they're all saying, get out. And Max Virtual's here. How you doing? All right. I want to thank everybody for showing up here. Really appreciate it. And so that's about it for the economic news and where we're at. This whole week has been pretty frothy, I guess is the best way to put it. January is typically that month that sets the tone for the rest of the year. Now, I don't know that you can look at just the first week and say that's January, obviously. But I've been trading pretty small and trading with the XSP mostly. It's a tiny little account that I use for demonstration purposes in the service. And so I trade really small there. And I haven't actually been trading in my larger account this week, but I'll probably change that next week. I think that next week and the following week, the second and third week of January, we should start seeing a definitive trend starting to develop. Which way is it going to go? I really don't know. I just knew that this week was going to be, like I said, frothy and probably best to go light and trade light. So I'm up for the week, not big because I traded small, but one thing I can say, I'm not down. All right. So there you go. All right. Let's get on to the course. And so what I want to tell you about the course, let's see, where is it? There we go. So before I get started, I'm going to just tell you about the course. Then we'll take a small intermission. I'm going to set things up and then I'll go into today's lesson. But the course is free. It's going to be online and I'm providing some of the content or a preview here live on the show. And I'll be doing that for the next week or two. And once it's up there, I'll start putting the course up there next week. It'll be free to anybody to go view. There'll be a public version, and then there'll be the members version that will have more content. If you want to see it, then you can just join the trial, and then you'll have full access to the course and the strategy around what we trade as our primary sort of bread and butter trade. Then there will be other content in there about the other trades and strategies and process and methods that we follow. That's what this is about. So right now, let's just take a little bit of a intermission. And then let me set up and we'll get right to it. I'm ready. All right. Today we're going to talk about the 0 DTE event and what 0 DTE is. So let's go over to the course. And 0 DTE, what does that stand for? That stands for 0 days to expiration. And that's the final day in the life cycle of an options contract. So here's the definition. A 0 DTE strategy is a day trading strategy that opens and closes a premium collection option strategy on the same day to collect a premium. This day is the final day of an options contract life, and on this day, the premium decays at the maximum rate. That's really important because that provides a huge edge for us. It's like wind at our backs. Now, using an asymmetric option strategy like the butterfly, a return on capital, or ROC, a ROC, in a range of 25% to 1,500% is possible. Now, you just saw me close that trade, which cost, I think, 36 cents, and I took $170 profit. So that's about a 450% return. So you can see that's right in the wheelhouse there. So the capital that I put at risk, I was able to get bulls on that return. Now, this chart here is illustrative of the premium decay that happens. Now, the contracts that we are trading, the options contracts, are weekly options contracts on the S&P index, the FTX. We also trade on the micro version of that, which is what you saw me trade on Thinkorswim there just a few minutes ago. That's the XSP. And so they act the same way. It is also a weekly contract. We also trade the E-mini futures, the E-mini S&P 500 futures contract, or the ES. And we trade options on that as well because it also has weekly options that expire 5 days a week. Now, these options, they are created 8 days prior to their expiration. And then they one closes on a Monday, another on a Tuesday, then a Wednesday, and a Thursday, and a Friday. Now, this chart here is illustrating what that premium, the time-based premium, looks like in that options contract from day to day. Now, the interesting thing that you can see here, and what I'm trying to illustrate, these little boxes that are outlining it each day. See, each one of these channels, these vertical boxes, represents a day. And up here, we have at the start, 8 days ago, each of these contracts is 100% of its premium, and then it's slowly decaying. That's what this red line is. The boxes that you see here is the amount of premium decay each day. And you'll see that as we go from day to day, there's not much change the first few days, and then that amount of premium that decays gets bigger and bigger. And then the day before, it's pretty big, but the day of, it is huge. So what that's saying is in a very short period of time, in the course of a day, that premium is decaying very rapidly. Now, from a practical point of view, you notice it, but you don't really start noticing it until about afternoon time, which is right in this area, when it really starts accelerating. And if you have your premium collection device in the proper situation, you can literally see that profit growing in your strategy. And that's why this event, the Zero DTE event, is so impactful and so incredibly profitable if you know how to put an asymmetric strategy in place at the right time. Now, a lot of people put on iron condors, which are also an asymmetric strategy, but in the opposite way. They put on huge risk to make a tiny little bit of profit because then they're afraid of trying to choose a direction. So they spread out their condor super wide, which makes it super expensive to collect tiny little bits of profit. We go the other way around. We try to collect all the profit that's there, and we take tiny risk for huge profit, a huge difference. And there are all kinds of benefits that happen because of that. So that's what we're talking about here. And let's see, what else do we have to talk about? Might as well talk about profit management. So yesterday I introduced the concept of mapping out what it's like to be in one of these trades. And you saw on Thinkorswim what that looked like. Let's see, we'll go back there. Let's go back there. Now let's see, I really can't turn this off. How can I turn this off? I'd have to hide the puts. All right, so here's our strategy. All right, now here's, when I'm talking about asymmetric risk to reward, the risk, here's the zero line. So when we put this G on, and this cyan line is at expiration. So when we put the strategy on, we're way out here. And you can see as I put my mouse over there, it's saying that the max risk on that is $36. But the max profit on this is $300 minus 36, or $264. So that's the risk to reward that you're getting. It's a 1-to-9 risk to reward. And so when you saw me close that trade, I actually took a good majority of that, $171, on my risk of 36. So if I were to take that and say 36 divided by 171, or 171 divided by 36, so that's a 475% profit that I made. So you can scale that up to just about anything. This could just have been an SPX trade that is 10 times as big, and it would have been the same thing. It would have been risking $360 to make $1,700, $1,710. So now you see the power of the asymmetry, because we're risking very small. And if we lose that, it's no big deal. We're not going to cry over losing a few dollars when we're going after such big things. Now, the caveat to that is that we don't always get right inside the profit tent like that. However, there's a wide range of prices that we could have gotten into that extend well beyond here, way out, as far out as here. Look, you could have profited, if price was way out here, you could have still profited. So there's a wide range of prices that you can profit from. It's just that the maximum, and it all depends on what time of the day it is. The time of day is what is most important, and that's what I wanted to show you with the mind map that I had up there just a few seconds ago. So here's that mind map, and so you can see that each one of the tentacles of this mind map are extending out from the Zero DTE profit strategy, and the tentacles represent the various times of the day, the ranges of time. And that's how we look at it. And the reason why we do that is that over that period of time, the profit is growing and growing. And as you saw in this illustration, if you imagine this being the course of the day, that profit is growing faster and faster as you get to the to the end of the day. So it makes a lot of sense to treat the various times or ranges of time of day a little bit differently because you have different risks to keep track of depending on where you are live to the time of day. Hopefully that all makes sense. So our profit strategy is like that too. We break that up into 3 distinct periods where profit is decaying at its slowest to that day between 9:30 the open to noon. It starts speeding up a little bit from 12 to 2:30, and then it starts really moving fast from 2:30 to 4. And I took my trade off just about 10 minutes ago at 3:36, so it was really moving. And on the very last waning moments, that profit decay is going to be even faster. There are sometimes when you be in a trade where you're sitting right in the middle of the profit tent and you've already captured $1,100 and there's maybe $900 left to go. And in that last 15 minutes and then 10 minutes comes and now you've just made another $400. Now there's only $500 left to go in 5 minutes. And if price just stays there, you could get that extra $500. So that type of attention, when you're at that time of the day, it requires a different type of strategy. So what we do is we then have different strategies depending on where we are relative to the profit tent, because where we are relative to the profit tent is also going to determine where we are on the profit curve. That profit curve is growing, taking the shape of the profit tent at expiration. And you have something called gamma risk that is building and building. That gamma risk is the slope of that profit curve. It's the sensitivity to price. As price moves back and forth, if it gets on the edge of that curve, you could move to the left and price and your value of your strategy can drop dramatically. But as long as you stay right in the middle of that profit tent, then you're going to be maximizing your price. So naturally, we have to create different strategies for the time of day and also where we are relative to the profit tent that you saw, that triangular cyan thing. So I'm not showing you any of those strategies right here because that would require us to go into some great deal of depth, and that's actually what we learn in the course, and how to actually manage that, how to journal your experience there, and how to optimize your performance over a period of time. And so that's what we're all about in this service, is to teach you how to develop that process for yourself and how to become a professional at it. So there you go. This is some basic stuff here talking about that profit management. So you develop your profit management around that following framework. We focus on 3 time segments throughout the trading session: morning, early afternoon, late afternoon. Then create a separate strategy within each time segment that accounts for the position of the price relative to the fly, outside in loss, outside and in profit, or inside the fly. And as I said, this results in up to 9 separate strategies. They're related strategies, but they're still separate. And you have to also take into account things like the context of the market. Is volatility rising or is it dropping? That will have a huge impact in terms of the rate at which your premium is decaying. Also relative to the price structure, the underlying market structure. Is there support or resistance aiding or working against your ability to stay inside of that profit tent? So there's a wide range of things that you need to know. There's no one that fits all cases. And a lot of people think, oh, you just make it a systematic strategy. Give me the formula. I'll just follow that, right? That's the way amateurs do it. If you want to minimize your profit, you learn how to do this, and you're going to see spectacular results. All right, there we go. So it's 3:50. I think we're pretty much at the end. So you know what we're going to do? We're going to wrap up this portion of the course, and we are going to talk about where the market's going to come. Let's take a look at the market. Where are we? It seems like it just died. We got up to that point and it just died. All right, Iz wants me to explain the yellow dots, please. The yellow dots. The yellow dots. I wish I knew what he was talking about, the yellow dots. On what chart or screen? Oh, the yellow dots on the diagram, the mind map. I think that's what you're talking about, the mind map. So let us go to the mind map then. The actual mind map. Here's the actual mind map before you saw a picture of it. Yeah, the yellow dots on the mind map. The yellow dots, they indicate if I have a, sorry, I don't know what's going on there. Oh, there we go. The yellow dots, here it is, allow me to put a note up here. And that note is my strategy, right? So if I go to here, this one also has a note up here. What do I do in this case? So that's what the yellow dots are. It allows me to put a little strategy up here. It's hard to see it on screen. Obviously, you can't see it, but it's in my tool. Now, you could use a tool like this, this is called Simple Mind Pro for the Mac, and it allows me to create this mind map and then segment everything like this, and I can put all the notes that I want inside the right side here for each one of these situations, right? And so just put all the information that I want in there about how I should, or what's the optimal way, at least over time, that I've found. So that's what the yellow dots are in this particular case. It would really depend on your tool. If you could just as easily use a spreadsheet and then just have a separate field that represents that dot where you put in your description. Who's the model in the background? That's not a model. That, my friends, is Bitcoin Bob. Every day, I must give Bitcoin Bob his due. Hold on. There we go. I knocked it up. Who is that guy? What happened to his hat? I knocked Bitcoin Bob's hat off. The dog's over there wondering, what the hell is this guy? Hey, look, Obi, what's this guy doing? Get up here. Get this guy. He's trying to bite him. Yep, that's what we think of Bitcoin Bob. If you want to see me give Bitcoin Bob a severe beating, you can go to my YouTube channel and look up Bitcoin Bob. I think you'll get a kick out of that. I put some high karate on him. So that's who the quote model is. Thank you, Robro. Yes, the closing bell in 5 minutes. So that gets me to my next question, and that is, where is this market going to end? Where is it going to end up? And let me give Bob his hat back. What's the matter, Obi? What? Hey, get it. I know. Obi wants to bite Bitcoin Bob. He saw me punching him and felt he needed to get in on the act. Yeah. As a matter of fact, you're right. Charles says it was a good clutch exit today on that spread. I took you guys' advice. Now, there is a strategy that I would use when I'm in that kind of situation. And generally, it's this. It's a trailing stop strategy. You note what your high watermark is in your profit, and then you have some sort of percentage or whatever that you decide, or some kind of other indicator that would get you out of the trade so that you can gain as much of the profit as possible while still giving yourself a chance to get to the maximum profit. In that case, it was about as good of a chance to get out because I had already achieved a good portion of the profit. There was only, I think, $90 left. That's significant. The $90 would have felt good if, in fact, price stayed there, but it didn't. In fact, price was right at the edge of the profit tent, and that was about the max that it was going to enjoy. So it was good timing. Now, on that trade, it's not that huge of a deal because we're only talking the difference between $170 and $260. But if I was trading the SPX and I had multiple positions, that difference could be maybe the difference between, say, $1,000 and $3,000, or maybe something even more dramatic, a few $1,000 versus $15,000. You want to be able to minimize your time there and decide what's the optimal time to exit that trade based on experience. Now, the way we develop that experience is pretty intense. You need to journal your trades. You need to keep track of a number of different factors in that trade. And you're not going to learn anything from one individual trade. You're going to learn from doing that same trade over and over. Now, how often are you going to get into that position where you can learn that? Maybe once every 5 or 6 trades. So it takes time. You might have to go through 20 of those trades before you develop a super solid strategy that is repeatable. And so that you might be talking about a year's worth of work. Of course, there are all these other different situations that you're looking at the same time, and each of those will represent a category of strategy that you could employ. All right, so Charles has got a rule here. Let's see what his rule is. The 10-10 rule. If you can lose the day's profit in the last 10 minutes with a 10-point move, it's an exit. That might work, and that might be a strategy that you employ, and that's what you want to go with because you've experienced good luck with it. You might also find that over some time, you could have acted a different way and achieved even greater profit. But you wouldn't know that unless you go through it and journal and then review that every week and then have a playbook that you can then categorize and rate all your trades and do that every week. And that's your continuous improvement process. Again, this is stuff that we teach here at 0-DTE.com. If you want to give it a shot, 4-week trial, go down below, right into the description, and you can join us, and we'll show you everything that there is to know about trading 0DTE. All right, we need, I haven't even So maybe one of the features that I'll do in the show is if we get the time like we had here, we'll do a little contest and we'll guess the closing bell price. And I don't know, maybe give away a prize or two. Cash prizes, apparel, you name it. What would you like? You got to tell me. But we'll take a poll on that too. So there's your choice. Cash prizes. I'm making a whole bunch of these hats. And I'm testing out a whole bunch of manufacturers of various shirts. It's a cool hat. 0 DTE to show your... All right, is it saying $38.95? The contest isn't on right now. Oh, you're telling me what the price was. I didn't even notice. $38.95. Not bad. Okay. All right, we're all set here. I want to thank everybody for showing up. I need to get myself ready. Got to take the dog and his sister out, the other dog, go on our daily trail walk, 4-mile trail walk with the Ridgebacks. So what we'll do in the future is we'll have a little contest and there will be prizes. All right. And yep, thank you very much, Max. Everybody, I hope you all have a great weekend and peace to you all. It was a good trading week and ended up in a good way. And we'll see you next weekend or next week. Have a great week. And what the hell am I saying? Time for the music.